Last week, a customer called me. Let's call him Rohan. Rohan runs a successful tech firm in Bangalore.
He was disappointed. He said, Kunal, the news is saying that inflation has decreased, but my home loan EMI has increased by 40,000 rupees again. What is happening? If you are seeing this, you probably don't worry about paying that EMI. You are concerned about its incompetence. Why is your capital flowing into interest when it should be accumulating in your portfolio? Hello, I am Kunal from EPK Capital. We create wealth for generations. Today I am going to tell you how the change in RBI's repo rate is quietly affecting your returns. But more importantly, I am going to tell you about those specific investment mistakes that I see high net worth investors making here in India and with our NRI friends abroad. As a bonus, I have created a detailed guide on 7 expensive tax traps for high net worth NRIs. You can easily download it by clicking on the link provided in the details. Now let's get back to the topic. Let's simplify the jargon. The repo rate is simply the cost at which your bank borrows money from the RBI. When the RBI wants to withdraw money from the system to control inflation, they raise the rates. When they want to promote growth, they lower it. Simple, right? But there is one aspect here that surprises most wealthy investors: transmission. If you took your home loan after October 2019, you are likely in the EBLR arrangement. It is transparent. If RBI rates increase, your rate rises almost immediately. However, if you are sitting on an old loan, let's say for that holiday home in Goa that you bought in 2017, you might still be on MCLR. It is a lagged indicator. For a loan of 5 million, a 0.5% increase is a small matter, but for a luxury mortgage of 50 million or 100 million, it amounts to an additional 35250 000 to 500 000 as annual interest. By refinancing a new EBLR loan, you can save the price of a new car within 2 years. Really, check your approval letter today. Now, let's make some changes. Debt is only one side of your balance sheet. Let's talk about the asset side. Let's take a look at the patterns of resident Indian customers. Mistake 1: overweighting in real estate. I see portfolios where 80% of the assets are tied up in real estate. The problem? Liquidity. I had a client worth 500 million, 450 million was in land. When a big business opportunity came, he couldn't bring liquidity on time. He lost the deal. Fix. It is for real estate preservation. It is for equity development. Ensure that at least 40 to 50% of your portfolio is in liquid financial assets. Mistake 2: ignoring lifestyle inflation. Buying a luxury car on a declining loan while your cash is sitting in a 6% FD. That's negative arbitrage. Fix. If your portfolio generates 12% and your car loan is 9%, then leverage is your friend. But don't sell compounded assets for toys. For friends joining us from Dubai, London, or the Bay Area, your challenges are different and, to be honest, more difficult. Mistake 1: ignoring dollar drag. You send money to India for an 8% NRE FD, but you forget about the annual currency depreciation of about 3 to 4%. So your 8% is actually 4% in terms of dollars. Solution: invest in Indian stocks that provide a return of 12 to 15% after currency adjustment. Mistake 2: hometown bias. Buying expensive apartments that you only see once every 2 years. They yield a 2% return and are a nightmare to manage. Fix: if you want Indian real estate, focus on REITs or AIFs. They are liquid, professionally managed, and you don't have to chase tenants for rent. Mistake 3, the nightmare of repatriation. Separating repatriable funds from non-repatriable income saves paperwork in the months to come. Whether you are facing an increase in the repo rate or dealing with $1 million transaction, the goal is never just to make money. It's about efficiency, structure, and peace of mind. At EPK Capital, we focus on the structure of your assets. Should it be in a trust? Is your debt structure optimized for tax? If you have a complex portfolio, let's have a conversation. No sales pitch, just a strategy session to see if we can optimize your legacy. I am Kunal. Let's create wealth for generations. See you in the next one.